sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking to local business leaders about their contributions to the community. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. Brent Wilsey, of course, the president of Wilsey Asset Management, joins us each week with a commentary. Today, why are stocks receiving less attention as a great place to invest? Here's Brent.
Well, what's actually going on, they had a Gallup poll, and the Gallup poll they did in April, and what it showed that stocks were the least loved long-term investment. And so I want to take a look at that poll, and I've been doing this for over 40 years, and what I looked at, I was kind of surprised, but not so surprised. Actually, when people were polled, 16% said that stocks were the best long-term investment. That was followed by gold. 23% of people said that gold was the best long-term investment. And I do want to point out, if you go back 45 years with gold, if you look at an inflation-adjusted return, your return on gold has been zero. No better than anything else. You just had about the same amount of money. And then real estate, no surprise here. Real estate, 37% of people thought real estate was the best long-term investment. And I always tell people, I think this is something that they kind of miss out, because they look what they paid for a house. Oh, I bought that house years ago. I paid $30,000. Now it's worth $600,000. I've done so well on that. They always forget about all the things that they do in that house. They forget about the insurance they had to pay. They forget about the taxes they had to pay. They forget about the repairs, the maintenance, the remodels that they did in that house to actually bring that house up to speed. I always do say a house is a depreciating asset. What appreciates is the land. But the returns actually look differently when you look at them. They're actually upside down. Stocks did the best. Stocks had, over the 30 years, a return of 10.3%. That compared to real estate had a return of 8.8%, and gold, that right now is so hot, everybody loves gold, well, that was only up 7.4% over the last 30 years. Now, why do stocks do so poorly? It's because people get too emotional about stocks. They buy when they think things are going to be great. They want to buy the popular names, the popular items. We talked about years ago, cannabis was going to be the next big thing. People spent so much money on buying cannabis stocks. One I remember was Tilray. Gosh, I think at a high of 170. It's now around, I think, around $10, $12 a share. Another one was the EV market. When EVs came out, like, oh, you got to have EV stocks because this is going to be the next big thing. We're not going to have gas cars any longer. Rivian also hit around, I think, 120, 130. That also trades around $10, $12 a share. Now, you cannot be investing based on the excitement, because what you're going to do is you're going to end up losing money. What you want to do is invest in a business, and a stock is nothing more than a small piece of a large company. You want to look at that company and say, what are their earnings? What are their sales? What do they have for cash flow? How much debt do they have? Is this a business with good management that I want to hold for the next 2, 3, 4, 5 years and collect some nice dividends from that company? That's the safest way to invest. That is called value investing. Growth investing is where you're speculating on some new thing coming out down the road, the next 3, 5 years, new drug or something else. So that pretty much wraps it up.
You can reach Brent by phone at 858-224-0004, and you can find him online at smartinvesting2000.com. The preceding portion of Good Business San Diego is sponsored by Wilsey Asset Management. We'll be right back.